Right now, as you're watching this video, there is a 1 in 4 chance that a claim on your insurance has been denied, not reviewed by a doctor, not looked at by a human being, but rejected by an AI that spent less time on your case than it took you to read this sentence. And here's the part that should make you furious. That denial is probably wrong, and the insurance company is counting, statistically, mathematically counting, on the fact that you will do absolutely nothing about it. By the end of this video, you're going to know exactly how to fight back. And I'm going to show you the real dollar amounts people are recovering when they do. My name is Nick, and I spend way too much time thinking about how insurance companies use technology to avoid paying you what you're owed. If you've ever opened the denial letter and felt completely helpless, like the system is just too big and too complicated to fight, make sure to hit that subscribe button and give this video a thumbs up if this helps you out. Because today we're talking about something that is costing American families tens of billions of dollars every single year, and almost nobody is talking about it clearly. Quick question before we go further. Do you even know if you have the right to appeal a denial? Most people don't, and that's exactly why I'm making this video. Here's what most people still think. Insurance is a safety net. You pay in every month, something bad happens, they pay you. Done. That is not how this works anymore. What you're actually buying, in a lot of cases, is the right to enter a bureaucratic obstacle course where an algorithm, a workflow tool, or some automated rules engine gets to decide whether your claim deserves a second look. Look, I want to give you a concrete number. According to analysis of data from the ACA marketplace, insurers denied roughly 17 to 19% of in-network claims in a single year. Some insurers had denial rates above 40%. Think about that. In-network. You went to the right doctor, you followed the rules, and still nearly 1 in 5 claims got denied. And here's the part that should stop you cold. A ProPublica and Capital Forum investigation found physicians reviewing and rejecting claims at a rate of roughly 1.2 seconds per case at one major insurer. 1.2 seconds. The average denial rate using these AI-assisted systems jumped by 20 to 39% at several major insurers between 2020 and 2024. That's not a glitch, that's a business decision. Counterintuitive. The more technologically advanced your insurer is, the more likely you are to be denied. The companies spending the most on AI infrastructure are posting the highest denial rates. Think about what that tells you about why they're investing in this technology. And the HHS Office of Inspector General found that among a sample of Medicare Advantage denials, 13% of prior authorization denials and 18% of payment denials actually met Medicare coverage rules. In plain English, claims that should have been covered were denied anyway. This is not paperwork chaos, this is industrialized friction. And if you had to guess how many denied claims people formally appeal, what would you say, 10%, 20%? In many marketplace datasets, it's under 1%. The system doesn't have to win every case. It just has to make sure most people never fight back. Hold on. Before your eyes glaze over, ask yourself, what if one denied claim costs your family $20,000 over the next decade? Let's prove it with real numbers. Let's say you're paying $550 a month for family coverage through work. That's $6,600 a year before you've used a single dollar of benefits. Your deductible is $3,000. Your max out-of-pocket is $8,500. So your realistic exposure in a bad year is already $6,600 plus $8,500 equals $15,100. Now the AI denies your MRI for $2,400, denies an outpatient procedure for $1,800, and a specialist bill for $600 slips through because the billing code was wrong and nobody caught it. That's another $4,800 your insured year just absorbed. Total, nearly $20,000, with insurance. But here's the part that doesn't show up on the bill. The forced decisions that come after. Do you pay now and hope for a reimbursement that takes 4 months? Do you put it on a card at 24% APR? Do you skip the follow-up because you can't float another $900 this month? That's not just a healthcare issue. That's a household liquidity crisis. Direct question. If a single denied bill took $2,300 out of your emergency fund this month, would your budget actually absorb that? Or would it go straight onto a card? That answer matters more than whether you technically have insurance. And the appeal math is brutal. The appeal success rate, when a human actually reviews the denial, runs 40 to 60% depending on the insurer. Nearly a coin flip, but less than 0.2% of denied claims ever get appealed. Less than 1 in 500. Insurance companies are betting, correctly, that you're too overwhelmed, too confused, or too defeated to fight back. Here's something almost no one talks about. Insurers have internal metrics called appeals persistence rates. That's a real term. They literally model your probability of surrendering after the first denial. The second, the third. You are a data point in a quitting probability model. Here's where it gets really interesting. And this is the piece nobody talks about. Insurance companies do not need every denial to stick forever. They just need enough people to stop fighting. That's the game. Think about it like one of those gym memberships people never cancel because the process is so annoying. Except instead of a $29 monthly fee, this is your MRI, your surgery, your kid's therapy. There's a psychological phenomenon called learned helplessness. First identified by psychologist Martin Seligman in the 1960s. When people experience repeated situations where they feel they have no control, they stop trying, even when control becomes available. Insurance companies have, whether intentionally or not, built the perfect learned helplessness machine. The denial letter arrives written at a 12th grade reading level. That's not an accident. There's research on this. It references policy numbers, CPT codes, ICD-10 diagnosis codes. It says something vague like not medically necessary per clinical guidelines without explaining what those guidelines are or how your case was evaluated. And you're already stressed about the health issue itself. So you look at that letter and think, I can't fight this. These people are too big. That response is not weakness. It's a completely rational reaction to an overwhelmingly complex system. But here's the shift I want you to make. The complexity is a feature, not a bug. It's designed to make you give up. Once you understand that, you stop taking it personally and start treating it like a game with knowable rules. Counterintuitive claim? The denial letter is not optimized to help you understand the decision. It's optimized to end the conversation. Once you see that, you read it completely differently. I want to tell you about Sarah, and I want you to stay with this. Because for the first 3 weeks of this story, Sarah makes the exact mistake you've probably already made. Sarah is a 38-year-old teacher in Ohio. She had a sleep study ordered by her doctor, suspected sleep apnea. The insurer denied it. Reason: not medically necessary based on submitted information. Now that phrase sounds final. It sounds like a doctor somewhere carefully reviewed her records and concluded the study was unnecessary. But sometimes what that phrase actually means is, the diagnosis code was too vague. The insurer wanted a different prior authorization path, or the request got filtered through an automated rule set before anyone meaningfully looked at her case. Sarah did what almost everyone does. She called the hospital billing department and asked about a payment plan. She was already mentally budgeting $200 a month. She'd accepted the loss. She was defeated. And then her sister mentioned that a coworker had successfully appealed a denial. Sarah had never even heard the word appeal in the context of insurance. She thought denied meant over. It doesn't. She called her insurer and asked for the specific clinical criteria they used to make the denial decision. She wrote down the name of the rep, the time, the date. She requested the denial in writing with the exact policy language cited. Then she went to her doctor and said, I need a letter of medical necessity that directly addresses these criteria, point by point. Her doctor wrote a 2-page letter. Sarah submitted her appeal. 6 weeks later, claim approved. $2,400 wiped out. Total time Sarah spent? About 4 hours across 3 weeks. That's $600 per hour in effective savings. That is the highest paying 4 hours of work most people will ever do. Here's the part of Sarah's story I haven't told you yet. When she called to start the appeal, the customer service rep said, most people in your situation just set up a payment plan. That rep is trained to say that. It is a scripted redirect designed to move you away from the appeals process. If someone at your insurance company ever says anything like that, that's your signal you're on the right track. Keep going. Now let's get into the AI piece specifically, because this is where the mechanics matter. These systems, EviCore, Navimedics, similar tools, are trained on historical claims data. They pattern match your claim against thousands of prior approvals and denials. They're not making clinical judgments. They're making statistical ones. They're saying claims that look like this with this diagnosis code, this billing pattern, this amount, have a certain probability of being valid. And the finance team set the approval threshold right here. The problem is your situation might be genuinely unusual. Your diagnosis might have complicating factors your doctor understands that don't fit neatly into a checkbox. And the AI, by definition, cannot understand context the way a trained physician can. In a 2024 audit of AI-assisted denials, researchers found that claims from patients with rare or complex conditions were flagged at dramatically higher rates. Not because the care was unnecessary, but because the training data simply didn't have enough examples of those conditions to classify them correctly. The system is stacked hardest against the people who need it most. A 2025 study found that 15% of denials were based on phantom evidence, the AI essentially inventing data points that didn't exist in the actual claim file. Not fraud detection, not clinical review. The system generating its own justification. This is why California, Colorado, New York, and several other states have passed legislation requiring insurers to disclose when AI was used in a denial decision. The regulatory tide is turning, but you need to know your rights right now, not in 5 years when this is common knowledge. The most profitable denial is not the one that survives appeal. It's the one that never gets appealed at all. That is the economics of this system. Here's where most videos stop. They give you the scary statistics, say know your rights, and leave you feeling informed but not equipped. I'm not doing that. What follows is a specific sequence, not general advice, a sequence that people are using right now to overturn denials. And at no point does this require a lawyer, a specialist, or any money up front. It requires time and the willingness to be persistent. Before we start, the most expensive mistake people make is paying the first scary bill before they understand it. That one panic move can lock in a loss before the real fight begins. Step 1. Don't panic. Document everything. The moment you get a denial, write down the date, keep the letter, and if you call the insurer, record the call if your state allows it, or take detailed notes with name, time, and reference number. Every interaction is a data point. Step 2. Separate the documents. Get the denial notice, the explanation of benefits, and the provider bill. These are not the same thing. A provider bill is not proof you owe that amount yet. A denial notice is not always the final word. Step 3. Request the full adverse benefit determination in writing. You want the exact clinical criteria used, the name of the reviewing entity, and the specific policy provisions cited. By law, they have to give you this. Don't accept not medically necessary as the full answer. Ask, what guideline? What threshold? Was a human clinician involved? Step 4. Get your doctor involved. Ask your actual physician, not a portal message, if they'll write a letter of medical necessity that directly addresses the insurer's stated denial criteria point by point. Most doctors deal with this constantly, and many have staff who handle it. When a human doctor reads your case, everything changes. Step 5. File the internal appeal within the deadline. Most plans give you 180 days. Some are as short as 60. Do not miss this window. Submit in writing, certified mail. Keep the tracking number. This is where most people lose, not because the appeal was bad, but because they missed the time window. Step 6. If internal appeal fails, go external. Every state has an independent medical review process. Under federal law, you can request an external review through an independent review organization, a third party not employed by your insurer, whose decision they are legally bound to accept. The external review process is free. That 40 to 60% overturn rate I mentioned? That's where it comes from. After your appeal succeeds, send a brief written follow-up to your state's insurance commissioner documenting that an AI-assisted denial was overturned on appeal. Takes 10 minutes, costs nothing. But insurance commissioners use exactly this kind of documented pattern to trigger regulatory audits. You're not just recovering your money, you're making the next person's fight easier. Step 7. Negotiate the bill while the appeal runs. If a provider is moving toward collections, ask them to pause the account while the appeal is in process. If the denial is ultimately upheld, ask for the cash pay or prompt pay rate. A denied $4,800 bill often isn't a $4,800 problem. It's a negotiation problem. A $4,800 bill after discount and negotiation can come down to $1,700. Awful, but survivable. Step 8. Escalate if the stakes are high enough. If your plan is employer-sponsored, contact HR or your benefits administrator. Large employers have leverage. For amounts above $10,000 that have exhausted internal and external review, a free consultation with a patient advocate organization may be worth it. The Patient Advocate Foundation offers free case management services. The best time to fight a denial is before it exists. Before any major procedure, ask 3 questions. Is this in-network? Do I need prior authorization? What is my estimated out-of-pocket cost? Get the answers in writing when possible. A portal message or email beats a verbal confirmation. If you're on a medication that regularly needs approval, don't wait until you have 2 pills left. Refill early enough to survive paperwork delays. Build a simple claims defense system before you need one. Keep a folder, digital or physical, for every major medical event. Save referral notes, prior auth approvals, bills, and EOBs. Screenshot provider directories before appointments. Track every phone call in one note on your phone. Compare every bill to the EOB before paying anything. That system sounds boring. It is boring, but boring systems save absurd amounts of money. Cheaper monthly premiums can be the most expensive insurance you ever buy, not because of what they promise on paper, but because of how hard they are to use when you're tired, sick, and under pressure. And when you're comparing plans during open enrollment, stop looking only at premium and deductible. Look at denial history if available, prior authorization requirements, drug formulary rules, network depth, how painful the plan actually is to use. A cheap premium on paper can become a very expensive plan in real life. Here's the bottom line. Insurance, AI claim denials are not just a technology story. They are a story about power, incentives, and your money. The machine doesn't have to be perfect to change your behavior. It just has to make access harder. It just has to create enough doubt, enough delay, and enough fatigue that enough people back off. And once you see that, you stop treating denials like random bad luck. You start treating them like financial events that require a response. I'm not saying every denial gets overturned. I'm not saying every insurer operates the same way. And I'm not saying automation can't be useful. I'm saying you need to stop assuming the system will protect you just because you paid into it. Read the letter, ask the extra question, challenge vague language, document everything. Remember that denied and correctly denied are not always the same thing. The people who save the most money in broken systems are not the smartest people in the room. They're the people who understand the rules, keep records, and don't get intimidated by official-looking nonsense. So if you've had a claim denied recently, don't spiral. Slow down, get the documents, find the reason, make the calls, use the deadlines, push the appeal, and if you haven't had this happen yet, build your system now. Before you're sick, stressed, and trying to think clearly with a $3,000 bill in your inbox. That's not paranoia. That's financial self-defense. If this helped you, hit the like button, subscribe, and send this to someone who thinks having insurance means the hard part is over. Because sometimes the hard part starts right after you use it. And when the paperwork gets messy, mistakes get expensive fast. Next, we're looking at the forgotten payment that made banks $4,500 richer. So subscribe, hit the bell, and like this video if it helped. And drop a comment. Have you ever appealed a denial and actually won?